get by. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here. I'm the founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Scott McKibben. You can check him out at MatterhornVP.com. They're Matterhorn Venture Partners. We're going to go deep into what he does and his interesting career. And Scott, before I formally introduce you, I always like to point out other episodes of the podcast people should check out. We met through Desmond Clark. That was a great episode of the podcast. Thank Des. He has a storied career in the NFL and now runs Bear Down Logistics. And so we talked about a lot of interesting lessons, stories, topics. Check that out. Since this is in the real estate space, I had on Joshua Dorkin, and we talked about how one of the largest real estate communities was built. He started Bigger Pockets, and also Matt Zalk of Key Renter Property Management and the interesting stuff they do in and help people with their real estate investment. And then Stephen Whiting, who talked about real estate marketing with automated app platforms. So that and more on InspiredInsider.com. This episode is brought to you by Rise25. At Rise25, we help businesses give to and connect to their dream relationships and partnerships. We do that in two ways. One, we're an easy button for a company to launch and run a podcast. So we do everything from the strategy, the accountability, and the full execution and production. Number two, we're an easy button for our company's gifting. So we make gifting and staying top of mind for your clients, partners, prospects, even staff, simple, easy, affordable. All you have to do is give us a list of your people. We'll do everything else. All right. And so for me, Scott, we call ourselves the magic elves that run in the background to make it stress-free for companies to build amazing relationships. And over the past 15 years, I found no better way than one, profiling the people and companies I admire on the podcast, and two, sending them sweet treats in the mail to enjoy. So go to rise25.com or email us at support@rise25.com. I'm super excited to introduce Scott McKibben, is co-founder and CEO of Matterhorn Venture Partners. And before Matterhorn Venture Partners, Scott was co-founder and CIO and managing principal at Brennan Investment Group. He oversaw acquisition, development, and sale of industrial properties across the U.S., totaling nearly $8 billion in transactions and nearly 8 million square feet in over 30 states. That's a lot.
Also 80 million, I think, actually.
80 million, right? 80 million square feet in over 30 states. He's also the co-founder and CEO of Madison Partners Realty, which purchased and managed over 5 million square feet of office and industrial space in Chicago and Milwaukee. And prior to that, Scott, as the VP of acquisitions at Prime Group Realty Trust, was responsible for the acquisition development of several million square feet of principally office buildings in the Midwest. And if you look at, Scott, your career, he's acquired or developed over $10.8 billion worth of, industrial and office properties. So he also hails from where I did, which is University of Wisconsin. He's a Badger as well. So yes. Scott, thanks for joining me.
Thank you. I appreciate this, Dr. Jeremy, and I look forward to sharing some time with you right now.
Let's start off with Matterhorn Venture Partners and talk about what you do. And anyone who's watching, I'm going to pull up their site. So if you're listening to the audio, there's a video piece. So talk about, I guess we call it MVP.
MVP, yeah. So we had that acronym. It's kind of funny. Is I started the company, left Brennan Investment Group on April 17th in 2024, and I started Matterhorn Venture Partners April 18th, 2024. So a day later, I didn't lose any time. And in fact, we were named Matterhorn Investment Partners for about 12 hours. And then my wife woke me up in the middle of the night and said, you know what? Matterhorn Venture Partners would be better because then you'd have MVP as your acronym. And That was a pretty good idea. So for one day we were Matterhorn investment partners, and since then we've been Matterhorn venture partners. And yeah, and I partnered with a couple of people that I worked with in the past or I respected and wanted to, including Matt Kay, who was with me right there, pictured alongside me, and he's been with me at Brennan for about 11 years, and then joined. I brought him along. Tina Ramos, she was at PCCP for many years, and also the CIO of Misner Group, and she was someone I was in an NAIP forum with for many years, and really wanted to work with her. And then Gary Nussbaum was at CBRE until last October, and I brought him over. And my son is an analyst with us, an associate that's working on deals, and he had worked at CBRE as well and Clear Height Properties after that for a little bit. And then Becky is we have a fractional CFO that is able to kind of just handle the amount of accounting work that we have now. It's growing, and eventually we'll have probably more needs for that. But that's kind of the team we have right now. And then we kind of partner with a lot of different people throughout the United States on different ventures.
What does the MVP do?
So we are in primarily industrial real estate. That's where I've kind of sunk my teeth in over the last 15 years. And so we mostly buy existing, but we will also build some. We're building in Vegas with a group, but we're buying throughout the United States value-add industrial real estate. And what that means is we're buying things that we think there's some margin between what we buy it for and what we sell it for ultimately. And usually we're holding this property for 3 to 5 years, and we'll do it anywhere in the United States. And we're doing something to usually add value, whether it's re-tenant it, do some capital improvement works to the buildings, maybe aggregate a portfolio of smaller deals to create a larger portfolio that would aggregate and be more interesting to institutions, and they'll pay a little more for it. So that's really what we do. We're pretty agnostic as towards what type of deal we'll do. We'll do small ones, we'll do large ones, we'll do ones in between, and we're aggregating portfolios in Florida, in Texas, Atlanta, and Chicago right now with different groups.
Do you ever build from scratch or their existing infrastructure always?
I have built from scratch. Most of my career, I haven't done that. I would say the majority of what I've done, I'd say 80% has probably been buying existing, but about maybe 20%. And there was a time at Brennan where I think at one point we had 21 active development deals going on throughout several states, probably a dozen states I would bet at that time. And right now I just have I have a land development site in Kenosha, 100 acres that we're splitting off and selling to different multifamily and residential developers. That's not normally what I do, but that made a lot of sense. And then we have some land by Nellis Air Force Base in Las Vegas that we're looking at developing. And we have one site in Chicago that will have some additional land, and we'll tear down an office building and potentially put up a industrial building there as well in an existing park of industrial buildings.
For some reason, Scott, real estate stuff stresses me out because there's so many moving pieces and logistics to it. To give people a sense of some of the deals, maybe we could talk through a couple examples. We were talking before we hit record about the Citadel Center.
Yes.
Talk about that.
Yeah, that was one of my early deals. So when I worked for a company called Prime Group Realty Trust, Mike Reschke, who had co-founded or he created that company, 4 publicly traded companies he created, and Mike is now doing the Google one, the old State of Illinois building with Quentin Primo, and they're doing that now. But Mike, is definitely a prolific developer and a big proponent of the city of Chicago. And one of the sites that we had, I was buying some downtown office buildings, but we had a site that we controlled at Prime Group Realty Trust at the time. And then Paul Beitler came in as a partner. And at one point, we were working with Bank One to make that their headquarters, their Columbus, Ohio-based bank. Ultimately, were bought by Chase. But while we were negotiating, there was a big billboard around the site. I remember that, and it said. We were like trying to be secretive about the bank because they were going to relocate from Columbus. And I remember Paul Beitler comes into my office one day and he goes, okay, from now on, everything we put on, it's got to say Operation Bruce Sky, like Bruce Springsteen, Bruce Sky. Like, we got to put that on there because they don't want anyone, if we say the bank, they're going to know the bank. And it's like, okay, I'll put that. So all our documents, all the plans, all the, pro forma say Operation Bruce Sky. So we get in, we have this big meeting with the bank, sees whatever the CEO of the bank goes, yeah, this is all great and all, but who's Bruce Sky? I'm like, well, you told us to do that. He's like, no. There's a billboard around the site that has blue skies. We want it to be Operation Blue Sky. So that was the beginning of that. It turned out that, the bank then got acquired by Chase, not relocating the headquarters to Chicago in the way that we thought. And what we were able to do then was, ultimately Citadel was kind of in growth mode. They ended up doing that. We moved a couple other, Holland and Knight, a couple other tenants into the building. And we built I believe it was a 50-story tower there that is still there to this day. And, was renamed the Citadel Center, ultimately. But that was a lot that had been available for many years. And so, yeah, it was a pretty fun project to work on at that time. And as a young 20-something guy.
How did that, because it seems like a big pivot. What are some of the lessons learned in, okay, we had this deal and then the whole project kind of pivots and we need to change course?
Yeah, I think that happens in pretty much every deal. So I went to the University of Wisconsin, as you said, and Grass Camp they call it the Grass Camp program. He was there. He died a little before I started there, but he was very well known in in the analysis of real estate and how you do it, but also just his approach to deals. And I'm probably going to get the quote wrong, but basically, a real estate deal is like a series of obstacles to going to a common goal, and that's what it is. It's just it feels like every day there's a lot of ups and downs. You feel like you're making great momentum on a deal, and then something goes wrong, and something comes up, and you think you're about ready to close it, and an environmental issue pops up, and you got to deal with that, and now you got to do phase two, and it's constantly just being persistent through struggles. That's what real estate is. And the people that do that and are able to kind of just continue to kind of muddle through and push through through that, get the deals done. But that's why it's not everyone does it. I mean, it's not incredibly hard, but it takes a lot of persistence to really get through a real estate deal. Almost any deal, even the little ones, have these issues.
You have the background in competitive sports. How has that helped you?
I think that's a lot of the people that I interact with that are in my role also probably have a sport background. I played Division I tennis at DePaul University. I wouldn't probably compete there these days. They have a lot of European players that would just smoke me. I wouldn't even be close, even if I was a young man. But that the discipline of being able to do practice and sports and just that competitive nature. I'm that way on the pickleball court now. I don't do tennis anymore, but I do pickleball, and it's very similar. I definitely have a competitive nature whenever I'm doing deals. And I want to win a deal because a lot of times you're competing against other groups, and you want them to select you. You want them to, allow you the opportunity to buy a deal that sometimes, not every deal is like this, but some deal times there's 30 bidders on a deal, and you've got to differentiate yourself and show why you're maybe the best group to be selected for that deal.
Another project, I don't know if you would consider this a niche on your end, but maybe talk about the data center project in Chicago.
Yeah, so I've been working a little bit on data centers. It wasn't really an area that I ventured into, but at Brennan, that world started coming together and becoming a little more as AI has developed. But even before that, there was just a lot more need for data. Throughout the kind of the whole United States, and then DC developed into a big data center market, and Dallas and Chicago kind of probably been some of the bigger ones that have done that. So early on, we had a site called Outgrowth Technology Park, which is a old Bussy Farm site, and we sold some of the land to Microsoft. We built a building, and T5 came in and put it in as a data center, and there were a couple of buildings that we sold to Align. We bought the old applications building, tore that that down, sold that to Line, and they're putting up a data center now that I think they're pretty close to completing. I was by it the other day. But one site in particular was a pretty interesting deal. We had bought, and it's not necessarily a data center yet because we bought an existing office building in right by Woodfield Mall, kind of 90, 290 right there. And it's kind of right on the corner. And it was called the 3Com building. And Capital One had been in there. It still had a lease in there, but never moved in. They built out the space. It's an immaculate, gorgeous space. And it's like over 500, about a 500,000 square foot building, multiple story. And they had a couple 100,000 square feet with several years left. But during COVID, they decided to, coming out of COVID, everyone to move downtown, and so they never occupied, even though they had a rental obligation for several years. And there were a couple other tenants in there. And then at one point, the FAA was about ready to sign a lease to go there, but it was at what was called a maturity default with the loan, or getting close to that with Ares. And then there were a couple other groups that were the partners on it. That were the equity on it. And because of signing that lease, and no one really wanted to pay I believe it was like 14 million of tenant improvements that were allocated that. The lender wasn't going to do it because maturity default. The other people weren't going to put more money behind a deal. Office deals, a lot, especially suburban office deals are struggling now. And so it was kind of a perfect storm where everything came together, and we were able to buy the debt at par from Ares and then negotiate a deed in lieu of foreclosure with the two groups. And then we ended up with this building that ultimately is going to be torn down, and it could be either industrial, or if the stars align, I know Rolling Meadows, the village that it's based in, would love to have a data center there. And we're in the process of exploring it. When I say we, I'm no longer I'm still an owner of the deal, but it's a Brennan investment group deal that the company had left a little over a year ago. But it was a really interesting deal. It probably took about 6-7 months. I think we talked to a couple different partners throughout the process. People dropped out. There was a lot of hiccups and a lot of drama. We were talking about kind of obstacles. It just felt like there was probably one thrown in front of us almost daily for 6 months. And so when that finally came to fruition, it was a very good day. But even now, to this day, it's still not a done deal exactly what's going to happen on that site. So that's the way it works.
Sometimes it just seems like a miracle something happens, because there's so many things that could go wrong. I'm curious, what made you decide to start Matterhorn Venture Partners? You could have probably continued a successful, illustrious career with the last group you were a part of. What made you decide to start Matterhorn?
Yeah, so that's an interesting one. So when I was about 50, so I just turned 56 yesterday, and so when I was about 50, I had told some of the different owners of I was a co-founder of Brennan Investment Group, that I was probably going to tap out around 55. Not because I didn't want to work anymore. It's just that I didn't think that we had 18 offices. I had about 35 people doing deals in some fashion, whether they're analysts, associates, capital markets people, all that things that that I was working with. And you start getting removed from actually doing the deals day in, day out. And I really wanted to get back to I'm a deal junkie. I do other deals too. I just bought an 8-unit building in Avondale like a week ago with one of my neighbors, and we're going to renovate that and stuff. So that's the type of stuff I do. And so I knew I wanted to get back to touching deals. And then, I was on the road between personal travel and business travel about 130 days a year. And so it was a lot of travel. And then to add it all, my wife, she had decided the kids had gone out of the house and she wanted to move back to the city. So I worked in Rosemont, lived in Park Ridge. I had a 5-minute commute, pretty much my whole career, 5 to 10-minute commute. And all of a sudden, with all the construction going on in the Kennedy, I ended up having 2.5 hours sometimes or more. And so, I did that for 2 years. And so there definitely was a part of me was thinking, okay, maybe I will continue to, do this type of job because, I was good at it, but I just wasn't what I think I wanted to do for the rest of my career. And so, when I added that commute, I think 2 weeks into it, I actually told my wife, I wrote down all the reasons why I should leave and move on. And it's kind of funny because I still have that. It was back in April of 22. And then by April of 24, I made, I left Brennan, and I really wanted to just, I wasn't looking to get away from working. I just wanted to work in a different capacity. And so I started the company up then. I grabbed the people that I wanted to, start this new venture with, people that I like, I respect, that are smart, good at getting deals done. And I got the chance to kind of have a fresh start, which is amazing. Not everyone gets to have this opportunity to kind of do it again, but I get to do it in a different fashion. It's not the same structure. I don't want to have 18 offices. It's not what I aspire to be. So we're doing it in a different way, but a lot of the same type of deals that I was doing at Brennan.
I want to talk about talent and recruiting talent because when you mentioned, we talked about some of the people that you work with now on the team. They could have stayed where they were at also, right? But somehow you were compelling and persuasive. I'm just curious, how that conversation goes when you're recruiting talent to come over to
Yeah.
your company.
Well, it's really funny. There's a funny story with Tina Ramos. I remember, like I had said to her for years that I was like, I love to work with you. I actually tried to bring her in to head up our capital markets at Brennan. We offered her the job, but it just wasn't the right fit. She was the CIO of Misner. She accepted that job, and I was hoping someday to work with her. And so when I said I'm leaving, I want to start my own company, we actually went to dinner together. It almost felt like a date, but it was a date of someone that's, like, because we both were like, she knew I wanted her to join. She wanted to join. And what I say, one thing I found, I was a little flattered in general about how many people wanted to join me. Like I literally probably had, it's probably no exaggeration, 50 people reach out in some fashion and say they want to join me. Some people with some fairly big positions at companies, but the trade-off of starting a new company is you can't, I'm not paying salaries. I'm like, hey, you're going to get ownership, you're going to get money on the come, but you got to be able to do that. And that doesn't fit for everyone. So some of the people were like, well, I've got 2 kids. I can't do this right now. I would love to, but if things change in the future, reach out to me. But, I definitely had a few people that volunteered to leave their positions. And so it was very flattering, to be honest, because I just, like, I didn't realize that I would have that type of pull of people. But, I'm a very enthusiastic, outgoing, and I'm aggressive. I work on working on relationships with equity, with debt, with sellers, with brokers, and so I think I've built a good reputation, and I guess that's the fruits of that. But I didn't realize that. And the other thing I've done my whole career is, and this has really kind of helped me, is whenever anyone's ever asked, say, hey, my kid wants to go into real estate, my this, someone wants to go, whatever, I'll spend an hour with them. I'll go have coffee with them. I'll have to come to the office, or I'll just jump on a call. And I don't know how many people I've had a lot of breakfast meetings, and over the last 14 months since I started the company, breakfast meetings and lunches, and where people, have said, and I didn't even remember sometimes, they'd be like, oh, you talked to me for like an hour one time, 11 years ago. And, this and this, you kind of told me, what's the difference between, you got to figure out where you want to be, entrepreneur, or if you want to be a corporate person, and, find the right fit for what your personality is and what you want to do. And it's just those type of conversations I had with them. And like a lot of them would like parrot back things I said, it sounds like me, but I didn't even remember having the conversation. But by virtue of doing that, by extending myself whenever I was been asked, it's kind of come back, and I've been rewarded from it. So it's been great. I've been able to really kind of see the fruits of planting those seeds throughout the course of just my entire career. Now it's been 30 years.
So it sounds like recruiting, obviously, and this goes into, if someone checks out MatterhornVP.com, they do have like a core principles page, which is kind of like goes into one of your core values, which is like focusing on people and just trying to help, which kind of helps with the culture as well. And it just sounds like also ownership, right? People want to be an owner, and that's compelling as well. Is there anything else that when you look back and recruiting top talent
Well, so,
has
so, so
helped?
now what's interesting is, I've partnered with a couple gentlemen in Texas, two gentlemen in Atlanta. I have a partner, and then and he has a couple employees in Florida that we've done several acquisitions that I've been doing. I started that company probably about 3 years ago, and just kind of grew that. But the two gentlemen in Atlanta, I was just there last week, and I actually met them in person for the first time. I got connected by someone that I know that they're all part of this Princeton alum group. I'm not Princeton alum, but they connected me with them. I met them. I felt like they'd be a good fit. And so what I'm able to do now is they get ownership in every deal. We're 50-50 partners. And instead of them being employees of Matterhorn Venture Partners, they're their own company. It's called Firestone. And Mark and Michael are really great. And I have Casey and Logan and are my guys in Texas I've done deals with, and Kareem in Florida. And these guys are 50-50 owners with us on the deals. We bring the debt and equity to the table. We help underwrite the deal. We do, we kind of legitimize it from sometimes an institutional capital standpoint. A lot of times these tend to be younger people. Most of them are in their 30s or early 40s, and so they need maybe a little bit of a helping hand to kind of get over the hump there. And so that's been great. I've been able to work with these guys. They can now grow their own brand. And eventually they might not need us. That's fine. We're going to be working with them for as long as they do. And then, if it's time for them to move on and us to move on, we'll find someone else within those markets to potentially do the same thing again. So it's a really good way of approaching the business. And instead of having 18 offices, I've partnered with guys in New Jersey. I partnered with someone in Vegas, and we're doing a deal in Denver right now. We just got a deal awarded to us. It's a really great deal. We're working with a brokerage group out of Denver to partner with. I've partnered with a group out of the Carolinas a little before. We actually didn't get the deal done, but there was a reason for that. But we were talking about doing deals going forward. So those are the type of things I'm able to do with not having them necessarily be employees.
Yeah, it's really interesting. I want to get into doing the deals a little bit and some of the mistakes you see and lessons. But when you start the company, Scott, do you have to raise capital, or is there just you have lots of relationships with banks? How does it happen where you just start up and obviously you've grown really quickly over a very short period of time?
Well, part of it is I've had a history of doing it, so it made it a little bit easier. But the last year, 14 months since we started, have been a really tough climate to do deals in. A lot of development deals have kind of stalled in industrial primarily. There's not a lot going on. There's still some, but not as much. And even acquisitions, there's a lot of people waiting on the sidelines for the dust to settle, whether it's the election or whether it's, the tariffs or whatever. There's always different reasons for people to kind of pull back. And so it has been a little more of a difficult environment to do this. It's not quite as bad as the Great Recession, but when I partnered with Mike Brennan in 2009, we started up the company. We were in a similar environment where it was really difficult. The first couple of years, we only did one deal the first year, two deals the second year. That's how few we did. So for probably 2.5 years, we might have done 4 or 5 deals. In total for the first 2.5 years of existence. Maybe even 3 years, we didn't hit our 10th deal to probably the 4th year. And so that's really, it took a while to get going. I had a little bit of maybe of a head start because I had a couple, as soon as I got out there, I went and chased a couple of deals down, and I started, finding partners on it. But I think we've been fortunate. I mean, I've got a good team around me, and we had a good team at Brennan, but it was a more difficult environment then. But it's a very, difficult environment. But I think because of my track record and all the deals I've done, I've been able to, get some of these institutional groups and some high net worth investors to invest in deals, depending on the size of the deals. And so we're really starting to kind of, I think, get to that next level where we're starting to do some larger deals, where we're going to be able to kind of really see the fruits of everything we poured into the last 14 months. But even if you look at what we've done so far, it's where I'm satisfied we've done a bunch of deals. I still would have liked to done more. It's just probably my competitive nature. So,
What about, when we look at deals, there's a lot of factors involved. What are some of the mistakes you've learned, either just observing or you've seen up close and personal with doing the deals?
I'm sorry, I lost you for a
Oh, so
second.
what
I was trying to
mistakes?
ignore a call. Say it again. Sorry.
Oh no, I was saying, what mistakes do people you have seen people make with when they're doing deals?
What mistakes? Oh, boy. Well, I think a lot of people, um, boy, there's so many mistakes I see. I think right now, the big mistake I think is people are tying up deals without having their equity in hand. And we've even made that mistake a little bit. And I think because the environment is a little choppy, that if you and especially some of these smaller companies that are just starting out, they'll tie up a deal and then they'll go around and try to search for the equity. And we've talked to several groups, especially on development deals, where they got $100 million development that is absolutely make would pencil out in an environment 3 years ago, 4 years ago, right? Coming out of COVID would have all day, or even out before COVID, would have absolutely made sense. Those deals right now, so they tie it up, they get the time to try to do this, and they don't have the equity lined up. I think right now in this environment, you need to go into a deal bringing your equity to the table and then do the deal. And I've noticed a lot of people have done that, are starting to learn that lesson because there's a lot of starts and stops and failed pursuits, and so that I would think the biggest lesson right now in this current market environment.
How did you even get into real estate in the first place? Because I know you studied law. You could have just gone off and probably been a lawyer, I imagine, at some point. Why real estate?
Yeah, well, I guess I always had a business mind. Even like as early as like fourth grade. I remember I was like, remember those Now and Later candies?
Sure.
Yeah, so you could buy like a six pack of
I
those
think I
for.
pulled out a couple cavities with those
Yeah,
things.
exactly. The worst candy in the world. But you could buy a six pack of them for a dime when I was a little kid. And so I remember I'd buy like 10 packs of them and you break them apart and I'd sell them for a nickel each. Or if you bought the whole pack, you get six of them, you get a break, you get a quarter. So I get dimes or quarters and I sell them. I'd be making like $2 a day or something, $2, $3. I paid for my baseball card collection, whatever. And then I remember thinking, well, I got the fourth grade market corner, but I got to get the third grade market corner. So then like I recruited one of my neighbor friends to do it, and he started selling to the third graders. But I didn't pay him. I said, "Here's the deal: whatever's left over at the end of the day, you can eat, but you need to give me all the money." So I was always a business guy, and in high school I was doing that, and I didn't know if I was going to go into real estate. I worked for a company called Draper and Kramer in college. I was playing tennis at DePaul, but also working. And my cousin worked there, and he ended up an older cousin, and he got me a job there. And I just realized I like real estate, so I started taking the real estate financing courses. And then I went to University of Wisconsin, and I knew I was going to go into real estate. I did the law degree just because I thought it would help supplement. I never wanted to practice law.
Hmm.
I got some advice from a couple of people that were in the industry. One person that had a joint degree. He said I would absolutely recommend in doing both. You'll never regret it, and I don't regret it. I was able to get my master's of science in real estate and my law degree. I was 24. I got it all done. Was able to get into the workforce at the same age as most anyone that was coming out of law school, even a little younger. And so it worked out really well for me. I knew right away that I was gonna go into real estate. I didn't even really interview. I talked to one or two law firms, but that really wasn't what I was doing. I was looking for a real estate job, and I got one in a tough environment in 1994. And that company ultimately merged into Profitably Trust, and I got to be VP acquisitions as a 27-year-old only because the one guy that was running the FFO model to take them public quit. And they're like, well, you're pretty smart at doing analysis. How about you learn to do an FFO model? And so I was working with the analysts in New York and DC and to help take us public. And I got to learn that. And along the way, I said, hey, do you want to buy this building? You want to buy this building? And they said yes. And I became VP acquisitions as a 27-year-old at Profitably Trust, which was a New York Stock Exchange company. So it was a
Wow.
good start. A little bit of luck. Someone quit right before and gave me an opportunity to kind of prove my mettle there.
Scott, I love hearing the stories and the journey I have one last question. Before I ask it, I want to, point people, they can check out the, Matterhorn Venture Partners, which is matterhornvp.com to learn more. My last question is just mentors. And the mentors could be actual personal mentors in business or distant mentors, like there's certain books or resources that you like. Who are some of your business mentors and maybe some of the lessons that you learned?
Yeah, different lessons from different mentors. In DePaul University when I was an undergrad, there was the brother Leo Ryan. He was a professor of a couple classes of mine. Wrote me recommendations letters. He was a big encourager of me, and just someone that was kind of a good advocate. Saw that I had, I think, some aptitude in the business world, and really was there to support me and write letters and call for whatever. So he was great. He had passed many years ago, but he was a great mentor. When I got my first job in '94, coming out of grad school, there was a gentleman named Kevork Gadarian that was Kev. He was a great mentor. He in a different way. I mean, he's a business guy. But not someone that had gone through all the education and schooling. He was just more, and he had a just good way with people and a good way with just kind of doing so I've learned different things from different things, and his ability to communicate with people and just kind of be there for people. He was that type of person, and I still to this day talk to him. And so throughout the course of my career, I love working for Mike Reschke. He was the most internal optimistic person in the world, and sometimes, especially because this business has these ups and down pitfalls, it's good to have that. I mean, sometimes I look at it and go, I don't know how you could be so optimistic all the time about everything. But he really and it's not something he just says. I think he truly believes it. And when you believe things and you make it happen, if you told me he was going to buy that State of Illinois building, was going to get Google in there, I would say, you're out of your mind. I would have never told anyone to ever even go near that. But he is an optimist, and he somehow throughout his career, he's had his ups and downs just like anyone else. But he came through with that. So there's been a lot over the years that I've had different people that have really helped support me and been a good like Mike Brennan is treats his investors so well. He always was. That is paramount to him, and I was not as good a communicator with my investors when I started my first company, Madison Partners Realty. And I learned at Brennan to be a much better communicator with investors and let them know what's going on. And it's not always good news, but you got to communicate with them and be open and honest with them, and they'll come back to you. And that's the rewards I'm reaping now too, because I did that, I learned that from him. So, there's probably 50 more I can name, but those are a few examples of some people that have helped me throughout my career.
Scott, I want to be the first one to thank you. Check out matterhornvp.com to learn more and more episodes of the podcast. And we'll see everyone next time. Scott, thanks so much.
Right. Thanks so much, Jeremy. Appreciate it.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sailing right now. I'm feeling like 100 grand.